Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. This week we'll be analyzing the markets as they closed on 30th of March 2018. We begin our analysis with the S&P 500 E-mini futures market. So this has been a market that was in a very sharp sell-off in the week prior to last one. In fact, we saw action reminiscent to the action we saw earlier on, which was the initial extremely sharp sell-off that this market had seen. And there were concerns among investors that we could see something similar to this, where price will likely blow past the swing low around here, where price last bounced, and we could see price levels much lower for this market. However, that has not really panned out at all. Over the past week, the sellers really weren't as dominant as they were in the week prior to last one, and the reason for that is from a technical standpoint, price basically found support at the 2600 round number, which you can see lines up with a candlestick low around here, and some of the candlestick closes and obviously opens right around here. We had been eyeing at the swing low right around here, which is the ultimate support point. You can see two extremely important candlestick lows that protruded down towards this level and bounced right off around this green arrow that we've drawn here, literally to the tick. This is where we believed we could see the market rebound and also initially head to when the sharp sell-off was midway. But last week we saw price sort of get withheld at the 2600 round number, and we actually saw a bounce right off of it. On the top, we're also holding as resistance at this former short-term swing low. As you can see, this was former support that turned into resistance. We had a strong bullish candlestick that closed strongly as well, and the next candlestick opened, protruded past this level only slightly, leaving a wick behind, and then we once again dropped right back down. Again, we held a support at this level, and on Friday we saw more bullish activity that sort of saw us closing right at the middle of this range defined by this resistance around here and the support at the 2600 round number. So going forward, as long as we do not see a break to the downside either past the 2600 important level, or we don't see price actually pushing significantly beyond this resistance over here, we likely would just continue to expect the market to be more uncertain and more indecisive. We obviously did not have any major fundamental developments in the past week as well. There's obviously concerns relating to the trade war with China and concerns about frequent rate hikes in the future, which is causing a lot of uncertainty and ambiguity for investors for this market, and which also explains why the market of the recent past has just been very volatile and more indecisive as compared to the past when we had a very strong and dominant uptrend going. So as far as next week is concerned, we're really just looking forward to the market either pressing past this resistance over here or pushing past the 2600 level to be able to create more momentum and a more decisive movement in either direction. Okay, so the next market we're going to be looking at here is the light crude oil futures market. This was one of the more interesting markets to follow the prior week. Obviously, the week prior to the last one, we had analyzed this market as having broken out of this wedge pattern formation here towards the upside, and we saw a very sharp and rapid move straight into this former extremely important major resistance level just at the 6600 round number. And last week we had analyzed that this movement looked strong enough to allow price to at least test the 6600, and we could potentially see price levels higher than 6600 as well. That really wasn't the case much, as resistance was obviously once again found at the 6600 level. We have price actually only just testing the 6600, and then we had bearish activity following the test and resulting in price actually bouncing off the 6600. It's currently holding as support at this former swing high. You can see former resistance has turned into support here, and we on Friday actually closed sort of neutral right in the middle of this zone defined by this former resistance area that's turned into support, and obviously the major resistance at 6600. We continue to hold a bullish bias for this market, and we do still expect the market to be eventually able to create a new high past the 6600 and this last important swing high. Although again, a lot will really depend on when and whether the 6600 level will cease to hold as resistance and allow price to push past. So for this week, we continue to expect probably another test of the 6600 level, and hopefully if we're able to break past the 6600 this time, we might well use it as support and basically move forward in the upward direction, basically in line with the more longer term uptrend that we've seen this market develop over the past several months. Okay, so the next market we're going to be looking at here is the gold commodity futures market. Last week when we were analyzing this market, we had talked about two possible perspectives for this market. We had obviously been talking about the 1350 major resistance level. We have had several occasions in the past when prices bounced really strongly off of this level, and for the fourth time last week we had seen price escalating once again hard into the level, and we talked about how we could either see this bullish momentum finally being able to push us past this major resistance level and then eventually use it as support and a launch pad to further create a more sustained move towards the upside. We also discussed how the fact that we have been escalating extremely hard into the level could actually also be indicative of the fact that we are probably going to be bouncing off of that level. We had compared this situation with the situation in the more recent past, where once again an extremely sharp move into the level wasn't really able to sustain itself, and we had seen price drop down just as hard. And here again, history has repeated itself, where buyers once again taking price extremely sharply into the level, only for sellers to be able to dominate again and bring prices down just as hard. So once again, we're back in a more range-bound market action for this market at large. Once again, the top limit being the 1350 major resistance level, and the major support here coming in from the thickish support and resistance level around the 1300 level. By thickish, we obviously mean that it's not a narrow range of price levels here that are acting as support, but more of a thicker zone where price hasn't really been precisely bouncing exactly off the 1300 level, but also at levels slightly above and below the 1300 level, basically creating a more thickish zone of price levels that are acting as support and resistance for price. And so really we're just pretty much now within this range here, marked by the 1300 and the 1350 level. And as you can see, on Friday we sort of closed midway into this range. So once again, we're back to the drawing board and now looking for and basically waiting for the moment when price will either push past the 1300 level, pull back, hold as resistance and continue its way down, or we're going to have to wait for a fifth test of the 1350 major resistance level and see if price is able to push past this level this time round. Again, if that is to be the case, we would actually expect price to be climbing slowly and cautiously towards this level rather than accelerating extremely fast, as we've seen on both of the prior occasions that price has tried to test this level. We can see that on both occasions it actually failed and sellers were able to dominate the market conditions again. So until we see a break past either of these two important levels, we're really again neutral for this market and continue for this more indecisive range-bound action to continue. Okay, so the next market we're going to be looking at here is the euro currency futures market. For this market, we've been talking a lot about the 1.25 major round number that has been acting as resistance for this market over the recent past. We've had at least a couple of occasions here when price tested the 1.25 level and wasn't really able to break past it in order to continue with this more longer term uptrend that we've developed for this market over the past several months. Instead, we've seen the sellers come in every time and take price down, although the press down from the sellers really hasn't been all that impressive at all, which also brings us to the important point that even though we're seeing the market continuously rebound off the 1.25 level, we're still not seeing enough evidence to suggest that this long-term uptrend has lost its steam, and we're possibly consolidating here for an eventual major correction into this long-term uptrend, or an entire reversal on its own. Instead, we're basically just seeing price tighten up here. If we draw the support rising trend line over here and the 1.25 resistance level, we can see that price is basically getting caught up between inside of a wedge pattern, and we probably expect price to just continue to tighten and squeeze within this pattern and eventually breaking to either side. If we do break to the downside, we might just end up creating a correction into this longer term uptrend, and we could actually see price basically test the highs around here. On the other hand, what we would be more willing to see would be a break towards the upside, because like we said, we're not seeing any major signs of a reversal here, and we're possibly just consolidating at the 1.25 level to eventually allow for buyers to be in control once again. And if we do actually see a break towards the upside that's able to sustain itself, basically pull back to this level, hold as support, which is turn former resistance, which is very solid, into solid support, and then allow and then basically push further up to basically resume with this uptrend. But a lot of it obviously just remains to be seen. We could actually, given the fact that price is really consolidating here, and there are really no major signs, price action signals, we should say, that indicate that price is preparing for a move down or move up. We're really pretty much open to both situations, although we would just be more inclined towards seeing a break towards the upside and the resumption of this long-term uptrend. So finally, we look at the 10-year Treasury note futures market. We've been talking about this market, about how it's been basically rounding up at the 120 round number, which is basically a look that you get when candlesticks really aren't able to push past prior candlestick lows and closes. And that's precisely what we were able to see here, contrary to the price action that we saw in the past, where we were seeing consistent lows being printed in the market, indicating that the downtrend was strong. Over the recent past, we were just seeing lows that were just getting tighter and tighter, and candlesticks just failing to close and failing to impressively move past prior candlestick lows, which basically creates this more of a rounding up of price. And it's really not a surprise to see price do that at a major round number, which in this case is the 120 big round number. And we were talking about how we would really not be surprised to see price basically pushing back above to create at least a major correction into this more longer term downtrend. And that's precisely what we're being able to see here. Last week we also talked about this more near-term support and resistance level created by the lows around here and the high around here, and that price was basically holding as resistance at this level, creating a very, very tight range for price, marked by the floor at the 120 round number and the ceiling at this more near-term support and resistance level. And we talked about how we would be anticipating a break for this market above this this more near-term support and resistance level. This past week we did actually see price pushing past it. We had a candlestick that closed above authoritatively. The next candlestick pulled right back down. We did hold as support at this level, and on Friday we sort of had a neutral close above this level. So going forward into this week, if this level continues to hold as support for price, we could definitely see more bullish activity for this market. On the other hand, if Friday's neutral close is to be indicative of the fact that the buyers are definitely losing their steam here, we might actually prove this move or break above this near-term support and resistance level as a fake one, and we could just tumble right back down, either to test the 120 round number again, or to just consolidate and be indecisive once again within this tight range.